Risk management is everything when you're trading futures with a prop firm. It's the difference between building a sustainable trading career and getting your account terminated in a few bad trades. Most prop firms have strict rules that aren't negotiable, and understanding exactly how these rules work, especially when trading the ES, can mean the difference between success and failure. Let's start with the basics of how prop firm risk management works. Most futures prop firms give you three main rules you absolutely cannot break. First, there's your daily loss limit, which is usually between 2 to 3% of your account balance. Second, there's your maximum drawdown limit, typically around 4% of your starting balance. Third, there's your profit target you need to hit to pass evaluation or get funded, usually around 6%. Here's how this works with real numbers on a typical $50,000 ES evaluation account. Your daily loss limit might be $1,000, meaning if you lose that much in any single trading day, your account gets automatically disabled until the next day. Your maximum drawdown could be $1,500, which means if your account balance ever drops to $48,500, your evaluation is over permanently and you need to start again. Your profit target might be $3,000, which you need to achieve within a certain time frame, usually 30 to 90 days, with the payment of monthly evaluation fees. The ES contract is perfect for explaining these concepts because it's the most popular futures contract for prop firm trading. Each ES contract represents $50 per point of the S&P 500 index. So when the ES moves 10 points, that equals exactly $500 of profit or loss per contract. 10 points can happen in just a few minutes during volatile sessions. This leverage is what makes risk management so critical. A 20-point move in the ES equals $1,000 of profit or loss per contract, which is your entire daily loss limit on a single contract. If you're not careful with your position sizing, a single bad trade can end your prop firm journey immediately. Let's walk through some practical examples of how to manage risk when trading ES with a prop firm. Say you have that $50,000 account with a $1,000 daily loss limit. The worst thing you can do is risk your entire daily loss limit on a single trade. If you put on one ES contract with a 20-point stop loss, you're risking $1,000 on that single trade. If it goes against you, your account is disabled for the day on just one trade. Now let's talk about your daily profit goals to hit that $3,000 target. Here's the realistic approach. You should aim to average around $100 per day to pass your evaluation efficiently. If you can consistently make $100 per day, you'll hit your $3,000 target in just 30 trading days. Here's the friendly reality check. Aiming for $100 per day is ambitious but achievable with proper risk management and patience. Some days you'll make $200 when the market gives you great setups. Some days you'll lose $50 and some days you'll break even. That's completely normal and expected in trading. A realistic daily approach looks like this. Aim for $80 to $120 on most trading days, with the understanding that consistency still beats trying to hit home runs. If you can average $100 per day over 30 trading days, you'll hit your $3,000 target quickly and efficiently, minimizing your monthly evaluation costs. Let's walk through a practical example. First, decide how many trades you'll take per day. Let's say 5. Then set your rules. If you lose 3 trades, you stop trading for the day. And if you win 1, 2, or 3 trades, you also stop. The key is to set clear limits and stick to them no matter what. You enter one contract long at 4,500. The trade goes against you and hits your stop at 4,497 for a $150 loss. Instead of immediately looking for a revenge trade, you step away for at least 30 minutes to reset emotionally. You still have $850 of daily risk budget remaining, which gives you room for 5 or 6 more similarly sized trades if good setups appear. Later in the session, you see another setup with similar risk parameters. You enter another one contract trade. This time it works out and you make $200 on a 4-point winner. You're now up $50 for the day, but more importantly, you've followed your risk management rules perfectly. Now your account is up by $50 and you've already taken 2 trades. If the next trade is a win, you're done for the day. If it's a loss, take one more trade. If that one also loses, you're done for the day. But if it wins, you stop there. You're out for the day either way. That's a good day. And if, on another day, your very first trade is a win, just leave the market. You did well. There's no need to push further. Here's how to handle winning trades within prop firm risk management. When a trade goes in your favor, don't get greedy and hold too long trying to maximize every point. Take profits at reasonable targets that give you a good risk to reward ratio. If you risk 3 points to make 6 points, you only need to be right about 40% of the time to be profitable after accounting for commissions. Also, consider taking partial profits as trades move in your favor. You might close half your position at your first target and let the other half run with a trailing stop. This locks in some profit while still giving you exposure to larger moves. Just make sure your partial profit strategy doesn't increase your overall risk beyond your predetermined limits. One of the biggest mistakes prop firm traders make is not adjusting their risk management as their account grows. If you start with $50,000 and grow it to $55,000, your daily loss limits and maximum drawdown should still be calculated from your original starting balance, not your current balance. Don't let success make you complacent about risk management. Remember that each point movement in the ES equals exactly $50 per contract. A small 3-point stop loss equals $150 of risk, while a larger 10-point stop equals $500 of risk. Always calculate your risk in dollars before entering any trade, and make sure it fits within your daily and overall risk parameters. Finally, remember that prop firm trading is a business, not gambling. Your job is to preserve capital while generating consistent returns, not to swing for the fences on every trade. The traders who succeed with prop firms are those who treat risk management as their most important skill, more important than market analysis or trade timing. Every successful ES trader has stories of trades that could have made them huge profits if they had taken bigger size or wider targets, but they also sleep well at night knowing their accounts are safe. The goal isn't to maximize every opportunity, but to create a sustainable approach that allows you to trade the firm's capital for years to come. With proper risk management and realistic daily goals, passing your $3,000 profit target becomes not just possible, but probable. You can even grow your account with just 5 ticks. Check out our other video to see how it's done.